Welcome to Bite-Sized Future, where we break down the most complex innovations into simple, actionable insights that give you an edge. Today, we're diving into 10 powerful AI tools that claim to predict market crashes before they actually happen, and we'll go deeper than just naming them. We'll reveal what makes each one worth your attention, how reliable they truly are, what they cost you in the long run, and whether they're a fit for your trading strategy. Stick with me, because by the end, you'll not only know which tools can help protect your portfolio, you'll know how to avoid the ones that promise big and deliver little. VantagePoint AI stands out for its long-standing presence and its bold accuracy claims. But what really matters is its track record across both bullish and bearish conditions. It offers verified backtesting data and taps into multiple markets beyond just US equities. It primarily relies on neural networks, which means it can spot patterns invisible to the naked eye, though it operates mostly as a black box, leaving some traders wanting more transparency. It's subscription-based and quite premium, but it integrates well with major brokerages, offers actionable crash alerts rather than just warnings, and has a strong support team. The company is stable, continuously updating its models, and has a loyal user base, which makes it a tool you can grow with if you're serious about proactive market defense. Insight AI is a newer chat-style market assistant that aggregates news, price data, and basic predictive analytics into an easy conversational UI. It's built for quick, usable insights rather than institutional-grade signals. It's strong on freshness and accessibility, a good option if you want early sentiment/context without building pipelines. But remember, it's positioned as an educational/decision support tool, not a licensed advisor. Validate any alerts with your own rules and don't overtrade on single outputs. Cost is low or freemium for casual users. API or app access is convenient, and it's a fast way to add an NLP layer to your workflow before you invest in heavier enterprise-grade feeds. Altriva Adaptive Modeler uses agent-based market simulation, lots of virtual traders interacting, to generate one-step-ahead forecasts. That design intentionally avoids heavy curve fitting by evolving models incrementally as new data arrives. If you like high customizability, defining agent populations, input variables, and evolutionary rules, this gives you transparency and experimental control that many black box systems lack. It's more of a research/modeling toolkit than a plug-and-play crash siren. License cost is modest compared to enterprise feeds. Integration requires technical setup, and its biggest strengths are scenario testing and stress simulation rather than simple sell now alarms. Quant Connect is a developer-first algorithmic platform where you build, backtest, and deploy your own AI and ML strategies using real market data. It's ideal if you want full explainability and the ability to craft specific crash detection logic. The trade-off is time and skill. Quant Connect is low cost to start, but requires coding and careful feature engineering. So factor in development time, data subscription costs if you need premium feeds, and robust paper trading before going live. Its community, marketplaces, and broker integrations mean you can scale from prototype to live execution without changing platforms, making it a great choice if you prefer ownership over an opaque subscription signal. RavenPack is an institutional news analytics provider that turns headlines, filings, and event data into structured sentiment and event signals designed for quant workflows, perfect as an early warning layer when media narratives and event clusters start to predict market stress. Reliability depends on the coverage depth you buy, enterprise pricing, and it integrates via APIs into quant pipelines or risk stacks. It's less of a standalone crash predictor and more of a high-quality data feed that improves other models' sensitivity to real-world shocks. If your aim is to detect sentiment spirals or liquidity-related events before prices fully adjust, RavenPack's data is a solid backbone to do it with. Trade Ideas, Holly, combines a nightly learning AI engine with intraday scanners and a virtual assistant that proposes trade ideas and risk parameters. Holly runs thousands of backtests and ranks strategies so retail and semi-pro traders get actionable entries and exits. Evaluate it for how its signals map to your holding period. Holly is more tactical, whether its stop/risk rules match your risk management, and how well you can integrate its outputs with your broker. It's subscription-based, simple to use out of the box, and is best suited to traders who want automated idea generation plus backtest transparency rather than full custom model ownership. Kavout Chi-Score packages AI stock scoring and screening into a product that ranks stocks using machine learning across multiple signals. It's very useful as a pre-filter to narrow universes before deeper analysis. Look closely at the score's input coverage, refresh cadence, and how it performs across sectors and market regimes. Machine-scored ranks can drift if not retrained for new regimes. Kavout is easy to integrate into screening workflows, offers variable pricing tiers, and is a pragmatic choice if you want AI-driven prioritization rather than full forecasting. Dataminter is a real-time public data event detection service used by institutions to spot emerging risks, news, social signals, unusual activity, before they become market-wider. For crash sensing, its value is speed and context. It can surface company-specific or macro events that precipitate wider sell-offs. It's enterprise-priced and built for teams who need low-latency alerts and curated context, so weigh whether you need that speed or whether lower-cost aggregated feeds suffice for your strategy. AlphaSense is a document and transcript search engine with strong AI summarization and sentiment features aimed at investment research teams. It helps find changes in tone or language in filings and calls that often precede fundamental surprises. As a tool, it's excellent for fundamental/qualitative early warning signals, e.g., management language shifts, but it isn't a crash detector by itself. Pair it with quantitative feeds or alert rules. It's enterprise-focused, comes with explainability, and is best when your crash detection approach includes both market data and fundamental sentiment signals. ACTUALLY no-code NLP provides an approachable way to classify and score news/social content and to build custom alerting lenses without heavy engineering. If you don't want to build your own NLP pipelines but need tailored, near real-time sentiment signals, ACTUALLY is a practical middle ground. It offers APIs, dashboards, and pre-built models. But check the coverage, latency, and how easily you can export signals into your execution or risk systems. It's a strong option for teams that want to hybridize human rules with machine scores without a full data science hire. Okay, promised bonus. 3 red flags to avoid when testing any crash prediction tool. First, beware super high accuracy, marketing numbers with no independent third-party backtest or out-of-sample reporting. Ask for raw performance tables and walk-forward tests. Second, watch for stale or narrow data feeds, late news, limited market breadth. Early crash signals need broad, timely inputs. Third, avoid tools that don't let you paper trade or integrate alerts into your risk rules. If you can't simulate the tool's real impact on your portfolio, you're flying blind. At Bite Size Future, we don't sell snake oil. We promise you honest, tested options and a practical next step. Pick 2 tools from the list, 1 data feed plus 1 execution/strategy platform. Paper trade for 30 days, and I guarantee you'll learn at least 2 actionable lessons about how these AIs behave in real markets. If you want, I'll build a 1-page decision matrix next. Tell me whether you want beginner, no code, or quant.